Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 2nd of July. So it's Non-Farm Payroll Friday today and we're probably going to see quite a few flat markets, but a lot of the majors are at key points where we would probably expect some reasonable moves next week, especially if the news is favourable. So we'll jump straight into the markets and see if we can identify any scalping opportunities today and then some trending opportunities for next week. So we'll look at the Aussie USD on the daily chart. You can see here that we had the reversal, which was pretty much perfect from last week. It came up to the roll reversal zone. Exactly what you would want to see from a point of breaking a big key zone. Quite often, when a key zone like this gets broken, the 76 was a very, very strong level. You can see that it really broke through and basically just smashed through it without any respect whatsoever, and then spent the rest of the week after basically retracing to that point. That really gives you a really good target to go for when it does get the small reversal, because all you need is a small time frame reversal at this point here. I'll show you that in a second. And your target to go to the previous level is your straight up place to go, because it's already been there and it's already tested the water. There's not a lot of resistance or support anywhere in between here, like coming up or going down. So it makes it a very clear target. Now, no surprises that it finds itself at this point here before a big news event. The dollar index tells us all we need to know about what's going to probably happen to these pairs, but we'll have a look at that in a second. So the way that you can break this one down, like straight up, you know that this is an area of roll reversal. So you've got many, many reasons to be shorting it from this point here when you get that change of trend. But we'll go to that in a second. What we'll do is we'll put a Fibonacci retracement on this one, okay? And we'll go from the, I'll draw it out a bit so you can see it. As you can see, the pullback was just past the 38.2 and in between the 50, the big sweet spot. Touched the 50, then came back down. And you know, you've got multiple reasons to be looking for shorts at this point here. And really the best way to actually bring that up is to more than like, I'll put a rectangle there as well, just to really highlight the area. Let me just pop a rectangle in this zone here. So when we go to the smaller time frames, we know what we're looking for. We're going to do a bit more teaching in this one because it's going to be a pretty flat Friday on a lot of the pairs. So we'll spend a little bit more on each pair and we'll go into a bit of a detail to give you a bit of an idea of what we should be looking for. All right, so we'll take her back to the rectangle that we're talking about. Okay, so this is the area. So this is where it broke through that zone and then came back and popped underneath it. Okay, so then we had all of the flat lining pretty much all around this zone, and then this is the area that we're really looking out for. Obviously the retest of that actual 76, then we get the lightning bolt that we're looking for. Okay, this is what we're looking for. Once we've got that in play, very, very straightforward trade. All we're doing, we've identified the lightning bolt. We know we're in an area of roll reversal, so we're looking for the entry point. Okay, once we've got this, we've got the pullback to the 20 moving averages. Of course, we're going to wait for it to break because it needs to form the lightning bolt, of course. And once it's done that, this candle confirms the lightning bolt. Very, very straightforward. We can enter after this candle here. Our stop loss goes just above the last peak, and then we can basically ride it all the way down. Now, if you miss that point, but you still, just because you missed that point, there's plenty of room to go because we know where the take profit is on this trade, right? So pretty easy to move down. Every time it touches the 20 moving average is a position to get in. And you can see that you've got multiple chances to actually get into that trade, even if you missed the first one. Okay, so as you can see, it's pretty straightforward to actually get into the trade once you've actually identified it. And I think that's the important part. A lot of people struggle with that. Don't be too afraid. When you see the setup, go to the smaller time frames. Whatever time suits you is the one that you need to trade, and off you go. Okay, and this is our logical target. It'll probably hang around here for a lot of today before non-farm payroll. So it's probably not going to get a lot of excitement after this, but that's how you enter it, and that's how you predict your targets when you know you've got a roll reversal zone. All right, we'll move over to the US dollar CAD now. This one's going from strength to strength. We talked about this last week. It had the pullback that the Aussie did on the retrace. And yeah, we knew it was strong. I talked about it last Friday, and I said this is probably a place where it's going to, reload and go. Hopefully you're able to take advantage of that. The MACD was super strong at that point. We were about to get a 20-50 moving average cross, which we knew was obviously nearly there already. And it's gone from strength to strength as well. So, this has provided a pretty easy target as well because it already broke through here. Very similar to the Aussie. It broke through a very key zone and then came back down and retraced it. So that makes it the easy trade. I like to call it the easy trade because it's the one that's already preempted where it wants to go and broken through any potential barriers, okay? So that's why we really like that. Same deal goes to actually enter this. If you go to the smaller time frames, you're going to find all sorts of, I'll screen it back. and you'll see all sorts of entry points to get into this trade. Again, same deal. Go to the 15-minute. Go to the 15-minute chart if you want to trade on that time frame, and you'll see all of the entries. Every time it touches the 20, off you go. All right, and you can probably get a couple on the 1 hour as well. The 1 hour gave us some pretty good opportunities as well. But look, the most important thing, all the things we talk about every single week, higher highs, higher lows, coming back to the 20, plays out all the time. When you get a really simple zone like that, you're going to see very, very good price action around it. So yeah, good trade. Hopefully, people were able to take advantage of that. And yeah, like I said, when you're seeing this setup after a pullback, you're getting a very, very strong indication of where it's going to go next. All right, we'll move on now to the US dollar yen. This one has been the gift that keeps on giving, and I have absolutely loved being able to trade this pair. It's given us so many opportunities. This is a daily. This has not broken the upward trend in quite some time now, not since really April. Has it even looked like going short? Series of higher highs and higher lows all the way through. Touches of the 20 moving average to get in. It's been, absolutely beautiful to trade. This has been even more of a long-termer, really, because you could have actually traded the pullbacks to the daily. That's probably the important part. All of the pullbacks have been fairly weak. You can see the candle structure is fairly weak to actually even come back to the pullback. So the sellers have been doing it under great duress to actually get back to a level where you would actually join this trend. And it's been a reasonable size, channel too. Like, I mean, you can make a case for this whole channel. It's starting to get more aggressive towards the end there, but you can see here that your tops are pretty easily defined as well. So let's move that down a little bit. Your tops are fairly easily defined as well, which meant that you also had targets to aim for every single time it came off the 20 or the bottom of the channel. Now, it's broken this point here. This is the point that we knew it was going to try and have a serious crack at. That's where it pulled back last time, but it's broken that. It's well and truly broken that, and it reached our target of 1150. We've been talking about, or 11150. We've been talking about the 11150 for a little while, and it's well and truly reached that now. So for all of you who are trading that setup from about a week or two ago, you should be out now. Could it go longer? I mean, it definitely can, but realistically, you got to go to this is why we go to the bigger time frames. When we go out to a weekly chart, you can see here that this is starting to come into very, very strong resistance now. Like, you probably still got another 50 pips before it gets into real trouble, but anywhere between that 111.50 and 112 is going to be really serious hard going for this particular pair. Okay, I'll draw the 112 to give you a bit of an idea of what I'm talking about. Right through there. Okay, so you can see there we had a very strong double top there. It was very strong resistance right through there. Touched it there and sold off quite aggressively. So, it's not going to get through this without a very, very strong fight from the sellers. So you got to be very, very mindful that the next little bit is going to be pretty hard going. The easy money's out of the way now, which is up to the 1150. It's ground its way up there. It's done really well. MACD's still looking good. Moving averages are still separating, but you can probably start to expect some weakness around this level here now. So just be careful with what it's done, but more than likely, I would expect a lot of you would be already out of this trade because we picked it up fairly early. Okay, so just be very, very careful of this level now because the 112 is going to provide some headaches. I can't imagine it's going to break through there. We've had a very serious fight. All right, we'll move on now to the dollar index. The dollar index has been another one that's been really playing the game well. This came back and touched our moving average. This is basically the same thing. Like, this is the CAD all over again. It's done pretty much the same thing. It's had the big boost up. Like, we were not looking for shorts in any way, shape, or form when we see these candles pulling up. You can see that the buyers are well and truly in control of both of these candles, all three of them. Well, this one in the middle was a bit of indecision, but these two, the buyers were well and truly in control at the end of the period, and it touched a very important moving average, and just as importantly, it touched the roll reversal zone. Okay, so the roll reversal is the important part there, as well as the candle structure. But you can see there that we've got resistance, we've got support, we've got resistance again, and once those two candles did that, it was all the way up. And the very first target, of course, was the easy money trade up to the point here, which is around that 92, sort of 35 to 40 area. It broke through that now. If the daily holds are up, this is a daily chart, so if the daily holds up and closes above this level, which I probably expect it will now, you're going to see that's a very strong move. But once again, if it wasn't non-farm payroll, I'd be getting a little bit more excited, but this is probably going to hover around this area. We've had a lot of excitement now until we get some results. If they're favorable, you're going to see a big push up, and if they're not, it might pull back a little bit. But you can see here, we're at where my crosshair is, we're at resistance again. The 92.50 is very strong resistance. We know this. We've talked about it quite extensively. 92.50 was our target. It's reached it now. So if you were trading this particular instrument, you should be out anyway for that trade that we put in. If you were buying around here, this was our target. Okay, you could have taken your first target there at the 35. 50 is definitely a very, very strong resistance point because of the support here and resistance there. So you've got to be really, really careful where it is now. Similar to how the US dollar yen is. But again, once non-farm payrolls comes out, Monday's very, very different story, and it could keep going. Our very next target is going to be the 93.30 to 93.50 area, which is this part up here. And it could do it fairly quickly too, so we'll certainly keep an eye on it. Of course, its opposite is the Euro USD. We'll have a very quick look at that. It did effectively the same thing as all the others, so no surprises to see it here at around that 118.50 area. The 118.50 area is a pretty strong area of support. It came down after this weakness here, which mimics what the dollar index did. It came down quite aggressively and found its little base here at 18.50. I would be surprised if it's very far away from the 118.50 at non-farm payroll time. But from this point onwards, it'll either rebound all the way back to 120, depending on the news, or it's going to break through here and go all the way down to at least to 117.30. That's more than likely what you're going to see. So realistically, they're going to be your targets. I like this one because it's got two very clear targets. And they've both got reasonable moves. You know, one of them's about 80 or 90 pips to the downside, and one of them's about 150 pips to the upside. But it's one of those ones where you've really got to wait for the market action to determine which way you're going to go. I wouldn't try and guess and check on this one. Basically, just let it play out and see what happens with it. But at a really good level, no surprises. But again, wait for the news, and whichever direction it chooses it's going to go, we know our targets and we know where our stop losses are going to be. So good trade. All right, we'll quickly touch on the S&P 500 before we wrap it up. Pushing to a new high. This is just, par for the course now, isn't it? It just seems to want to do this. 4th of July holiday on Monday. We've got to be very, very mindful of that. You know, 9 times out of 10, Friday's a bullish day when non-farm, when they've got especially on a non-farm payroll Friday, and when you've got the 4th of July weekend coming up. This is probably, if this is going to play out like the normal playbook would, you're probably going to see flat to a little bit of strength tonight, and then you could potentially see a bit of a sell-off into next week when they come back from their holiday in the US. So really, it's just one to watch. I'm not keen on trading it, and if you were trading it, I mean, look, what have you got really? You've only had a handful of pip moves. It hasn't really gone anywhere in any great hurry. So for me, this is probably just a watcher. I'm more inclined to either take a pullback down to the 42.30 area, maybe look for a long off that zone around the 20 moving average as well, or basically let it fall through and break through. I'm not keen on trading something that's going to new highs when there's so much news coming out, so it doesn't really excite me to actually get involved in this trade, but it's certainly one to set an alert for and watch out. So keep an eye on non-farm payrolls tonight, everyone, and then we'll look at Monday again with fresh eyes. You know that we're at key levels. Everywhere they need to go has been predetermined, really. Just depends on which way they swing. So hopefully you get some good opportunities. It's been a really good trading week. I think we've had some really good opportunities. Hopefully you're able to catch hold of some of those. Have a great weekend, and I look forward to seeing you all next week.